All right, let's talk about money. Specifically, let's talk about the place where money goes to party, Wall Street. Now, I know what you're thinking. Wall Street. A bunch of guys in suits screaming into phones. Like a really intense, high-stakes auction for a slightly used Lamborghini. But that picture is getting old. It's fading. Today is February 5th, 2026, and the financial world looks very, very different. The change isn't just a feeling, it's in the numbers. Cold, hard, you can't argue with this data. It's a whole new ball game, and some of the old players are looking a little lost on the field. First, let's get into the data drop. Think about this. Over 70% of all stock trades aren't even made by humans anymore. They're made by algorithms, computers, machines that can make a million decisions before you've even finished your morning coffee. Meanwhile, trust in traditional big banks has taken a nosedive. A recent survey showed that less than 30% of millennials trust big banks to do what's right. That's a lower approval rating than pineapple on pizza. And while the old giants are posting sluggish growth in their trading divisions, the fintech sector, those slick new finance apps on your phone, has exploded. With global investment pouring hundreds of billions into them over the last few years. This isn't just about stocks and banks, though. It's a fundamental shift in what we even consider money. The crypto market, once a niche corner of the internet for tech nerds, has seen its total value swing by trillions of dollars. It's like a financial roller coaster designed by someone who thinks safety bars are just a suggestion. Millions of regular people who were once locked out of the investing world are now trading everything from fractions of a Tesla share to digital art of a bored-looking monkey. All of this adds up to one giant, flashing neon sign that says, the system is changing, whether the old guard likes it or not. So what we're seeing is a perfect storm. We have lightning-fast technology, a deep-seated distrust of the old institutions, and a wave of new, accessible tools that promise to put the power back in the hands of the people. It's a revolution, but a quiet one. It's not happening with pitchforks and torches, it's happening with QR codes and two-factor authentication. The old Wall Street, that exclusive club with a velvet rope and a bouncer named Chad, is finding that the party has moved online, and everyone's invited. But a party with no rules can get messy, and people can get hurt. So why is this happening? Why is the Wall Street we see in the movies suddenly looking like a relic from a museum? Well, there are a few big reasons. First, and most obviously, is technology. It's the engine driving this whole thing. Computers analyze markets and execute trades in microseconds. Human traders look slow, like bringing a horse and buggy to a Formula One race. The old model relied on information advantages and personal connections, both getting bulldozed by raw processing power. The game changed from who you know to how fast your server is. Second, the rulebook is struggling to keep up, like refereeing a soccer game using chess rules. Regulators have been playing catch-up for years. When new tech like high-frequency trading pops up or decentralized finance platforms, it creates a gray area. Some firms jumped into those gray areas, finding loopholes before rules closed them. This led to market instability, spectacular collapses, and many regular people losing their savings. Innovation sprints ahead, regulation ambles along, stopping to tie its shoes. But the biggest reason for this power shift is the people. You, me, everyone. A growing demand for control and fairness. For decades, investing was complicated and expensive, keeping most people out. You needed a lot of money to get started, and you paid high fees to a guy in a suit using jargon. Now people say, no, thanks. They want to invest with the $20 left after rent. They want transparency. They don't want to feel taken for a ride. This desire fueled a new financial ecosystem. Robo-advisors building portfolios for a tiny fee. Apps letting you buy a 1/1,000,000th of a share. Platforms teaching investing with simple, easy-to-understand guides. Old Wall Street was a monologue. The new financial world is a conversation. people grabbing the microphone. Power is being distributed out to the edges, into the hands of millions. Okay, so the ivory towers of Wall Street are getting a bit of a shakeup. That's great, right? Power to the people. But what does this new world actually mean for a normal person just trying to save for the future? Well, it's a mixed bag. It's like being handed the keys to a really cool, really fast car, but nobody's given you any driving lessons yet. On the one hand, this new era offers unprecedented access. The gates to the kingdom of wealth building have been thrown wide open. You have more options than ever before. You don't need a rich uncle or a secret handshake to start investing. Use a robo-advisor that automatically manages your money and charges a fraction of a human advisor. Use an app to buy fractional shares so you can own a piece of companies you like. These tools are democratizing finance and letting more people participate in the market. It's a powerful step toward closing the wealth gap. But here's the other side of the coin: risk. With great power comes great responsibility, and a real chance to lose everything on a meme coin named after a cartoon dog. Many new platforms are built to feel like games. They use confetti-bright colors, push notifications, then sometimes show cautionary red warnings. That design can turn investing into a trip to the casino. New investors, lured by get-rich-quick promises, can get burned by volatility, making risky bets without understanding the consequences. This is where the path forward becomes clear. We need a new social contract for finance. First, smarter, more agile regulations to protect consumers without killing innovation. Think of them as traffic laws for the digital age. Second, a massive push for financial education. Companies that build these tools must teach not just how to trade, but why to invest for the long term. Third, demand transparency. Firms must explain fees and how they make money in plain English, not 200 pages of legal jargon. So the world of finance is in the middle of a massive, chaotic, and slightly terrifying transformation. It's exciting, but it's also a lot to take in. You might be thinking, okay, Trevor, I get it. Things are changing. But what am I supposed to do right now? It's a fair question. When everything feels overwhelming, focus on one simple, powerful action. You don't need to become a Wall Street expert overnight. You don't need to risk your life savings on the next big thing. You just need to take one small step. Here is your call to action. Make a simple 5-year financial plan today. That's it. It doesn't have to be perfect. It doesn't have to be complicated. Open a notebook or a document on your computer and write down 1 or 2 financial goals for the next 5 years. Maybe it's saving for a down payment on a house. Maybe it's paying off a student loan. Maybe it's building up a small emergency fund so a flat tire doesn't become a financial crisis. Once you have that goal, work backward. Figure out how much you need to save each month. Then find a simple, low-cost tool to help you. Look for a reputable fintech app or a low-fee index fund from an established company. Automate your savings so a small amount moves every month without you thinking about it. This one act, making a plan and automating it, is the most powerful weapon against market chaos and emotional decision-making. This is a moment of hope, not panic. The old Wall Street is not being destroyed. It is being reborn. The new tools and new players are giving more people a seat at the table than ever before. But a seat at the table doesn't guarantee a good meal. We have to make this system fairer, more transparent, and more educational. It starts with each of us taking control of our financial futures, not with risky gambles, but with a steady, boring, and incredibly effective plan. Make your plan today. That's how you help build a better Wall Street for everyone. I am Ray Montoya, and this is Economics.